Well, he runs Deploi. And Deploi is an interesting startup located here in Stockholm. And they plan to disrupt the private credit via tokenization. They scored top 12 at the Paris Blockchain Week and were the winner of the European Blockchain Conference in Barcelona last year. So, welcome.
Hi, thank you.
When did we meet? In the beginning? Should you tell about that story?
When we met Oskar?
Yeah.
Well, the story was like we were in Barcelona and supposed to cover the Nordics. And we knew someone who worked at the event.
Yeah.
Yeah, and we had headed home after the second day was finished. We were totally done. And then she messaged you and asked, did you know the winner was of the startup competition were from Sweden? And we were sitting at the restaurant laughing at ourselves. And then we sent you a message and then you invited us over. So thank you.
Yeah, thank you yourself for being so proactive and coming so fast. And yeah, I think it was a nice evening that we sat down.
Yeah.
Shared some things over nice conversation. So thank you.
Yeah.
And since then, what have you guys been doing? Because you haven't maybe been in the stealth modus, but still not bragging or doing that much on the PR stage. But where are you at the moment?
Yeah, at the moment, we're kind of live with the product. And I think we have geared up for almost a year to be at this stage, and we are just quietly and with biggest humble in our team to just build and I think what we're currently doing is what we can foresaw is the private credit funds blowing up and the investors are not being happy about them, and that is also one of the highest motivations that I foresaw 2 years ago, that it will happen, and it happened, and I was like, okay, this year is the year that we need to full force and push forward as much as we can. But I'm super glad that Deploi has grown so much in a short period of time, and
And what is wrong with private credit in the old way? Because it's sort of a hidden thing from many people. It's for companies. It's for high net worth individuals, maybe.
It's also grown into be one of the largest asset classes outside of banking. Yeah, what's driving that as well?
Yeah, I think one of the major drivers, I will start with the growing phase of the markets. Why in the past decade it has grown so much is because of the yield that it offers. It is much more bigger returns than you would get in the public markets. And also at the same time, lending has grown tremendously in the private sector. You also can see so many also fintech-based solutions coming out in the past decade, allowing businesses to have much more larger access to finances, which also actually impacts the economy, right? Because in my humble opinion, small and medium-sized enterprises are the backbone of our economy in every single country. It's not the corporates in general. Of course, corporates are dictating some part of taxes and everything, but still the local economies are something that needs to be supported. So yeah, they need liquidity to handle it, and of course they share the profits from the loan repayments with the investors, and that's been very attractive. And at the same time, larger institutions like BlackRock, Apollo, or Blackstone, they're the ones also pushing quite a lot in the private credit fund side. Simply because the yield is quite really attractive, and I think in the past I would say 5 years we have been a bit over leveraged in that case. Right? And why private credit funds are not so efficient or attractive anymore is because it's been in shadow banking for 40 years. It's not transparent at all, as you would say. If you are an institutional investor, let's say a pension fund, you are locked in for 7 to 10 years without any redemptions. because these redemptions that were in the headlines are just for the low yield based products, and it's not for institutional like that. And that is only 5% of redemptions possible on a quarterly basis, right? So 5% of your whole investment every quarter is only redeemable, and that is also not guaranteed. But on top of that, what the general partner at the fund would ask from you is though 2 and 20, so 2% on the volume to invest every year, and then 20% on your success. Sometimes it's 15, depending on the fund, and there are, of course, rules. And then you have pricing. Pricing events are evaluating how much your investment is worth every quarter. So it's a NAV. And they present that NAV on a quarterly, maybe sometimes on a monthly basis, but that's it. It's still a lag, right? You don't know what's kind of going on. And there's now quite big also transparency on the rating. So they use Fitch or Moody's. And I would say like these guys are the ones responsible for 2008 as well.
Yeah, I was about to ask that. They also the same guy. They have
exactly. So, it's kind of like a conflict of interest from day one that these private equity funds are having with these rating agencies, because they're the ones paying them to actually bring the rating on this portfolio, right? So how can that be questioned a lot in the space? That's because everyone is using them, everyone's trusting it. But I think the time is really soon about change, especially also about the ratings, because a lot of people start to understand that there's so much data available. There's AI development has been gone to that stage that anyone can kind of like develop as well. But what we're doing on Deploi side is we're kind of like opening up the black box, right, of this private equity funds.
And what is your solution then?
Yeah, good question. So our solution is like replacing the private credit fund structure. So completely supporting both sides. Like we have the lender side who are originating the loans. They need capital to grow their business and issue more. And then the second part is the investor side. They're interested to deploy the capital. So these are usually the family offices or fund managers. They can be also insurance company managers that have a lot of liquidity, pension funds as well. So we just call them as a liquidity provider or LP in this case. And they're interested to, of course, generate the yield, generate the best return on investment against the lowest risk. And of course, they need to diversify their investments, so they cannot like just invest everything in one, like let's say public markets. They need, of course, diversify commodities, public markets, private credits, mortgages, whatever is the case. They want to fund the operations. But we take care of like what funds are doing, but in the sense that it is opened, it is risk managed, and more importantly, we're creating also the first secondary markets. Not in the sense that it's a solution, right? In the sense that we're also bootstrapping from the funding sources, the liquidity for the secondary trading. That also includes real-time NAV pricing. So you as an investor can see every second what is your investment worth. And more importantly is about how you can also incentivize the order book. And the order book can be incentivized also with intraday yield. So every single exchange, the spot market, right, that you see the orders, that liquidity is not being actually efficiently used. It can be only used if you add really interesting solutions to it. And there's really big institutions that are just offering. I think it's only one actually for intraday yield product. Intraday yield means like you can put your money in. Let's say you generate close to 4%. Per annum, but you can get the money back in T+1, so basically the next working day you can get it back. So that's the idea of the intraday yield. But more importantly, like we're also bringing the lenders to institutional capital, because our major audience for funding sources are these institutions, not retail. Because retail is, I would say, something later in our plan in Roma, but for now just more institutional, more global, so it's more efficiently to plan the liquidity. Yeah.
But what are you doing in practice? Is this an example of tokenization of real-world assets?
Yeah,
which is a sort of a buzzword.
Yeah. I mean, we tokenize private credit. but we act as an issuer. Like we don't wrap things. Majority of the industry, I would say, is too obsessive about just tokenization wrapping stuff. I think I would say that's not producing the value we need. If we see the ethos of blockchain, like it should be independent, should be transparent, and so forth. So that's what we're also taking care of. This is by being also, of course, issuer. Still, we have some responsibilities to take care of, but we tokenize the so-called loan asset itself. So every single token has its own underlying asset that generates the yield, and is connected directly, legally, and technologically to the asset in both worlds, in the blockchain and non-blockchain world. So, and that's what we provide, and we take care of also the compliance, the analysis of the lending companies, and also of the monitoring them. And then, of course, bringing on the table deals. I think that's also one of the most important parts, is like bringing in the deals. Because my experience has been also in investment firm and also in banking. So I had I have really wide network of that. So for me, it's a bit easier. But yeah, I would say the value add is when you can like put up everything in one place and make it much more trustable.
How long have you come? As I understand, you are in business, but you also have built a backlog, as I understand.
Oh, yeah. I mean, there is a backlog, yeah. I mean, I think the first really big goal will be in Q2 is the secondary market exchange. So we have some really big 2 partners in progress to kind of like launch it. And then we also have one of the, I would say, coming back to Moody's and Fitch ratings and everything. Since we have the methodology, how we are doing, and also taking best practices from our experience in also in the fund, because my CEO Rob, he was actually leading a fund of over 100 million, so he has also had nice experience. So we have gathered our brains and thoughts, and also from the practice, and we're bringing up a first open source rating system. For free for every financial institution that wants to use it and also contribute, because I think the world can only be much more better, much more efficient if we, let's say, ratings of, I think, one of the most things that you cannot monetize on, but they're monetizing on. So the same, I've seen so many other like new startups of fintech doing business in rating systems, rating financial products. Yeah, but that doesn't make sense. You still have a conflict of interest. So, and I think, we definitely want to contribute a lot. And one of our like dedicated soonest products within a month is the rating system, and then the secondary markets. And also, we are working with Kantar network. So the secondary markets will be there available for everyone to use.
You called it shadow banking, and you're sort of illuminating on this business.
Yeah, we are.
And you even have said that you think that the package of doing this with funds will disappear or will be disrupted because of the type of business that you are building.
Yeah, exactly. I mean, like our goal in the long run, let's say in 10 years, I think how things should be funded globally is like, hey, there's investors, they're putting up in money, then the AI and blockchain will prioritize where this money will go to, depending on the yield, depending on the risk, depending on the need. Because currently now how I would say debt is being given out is without additional value. And it should be everything automated, right, and managed, because it's just money movements. It's not something that you need to go out and build and have physical presence, right? It's just...
Sorry, I just have to say, I think we're sort of running a bit over time on this now, so we need to wrap it up.
Okay.
Yes, but and you are 6 people at the moment, and moving into the market more and more. So when will we see great news from you guys then?
I would say, we're planning up to have something in about a month, so before summer for sure. So we'll come with some announcements very soon.
Yeah. And we will keep following. And to the viewers, this is a Swedish startup working to disrupt a global industry.
Yeah.
Interesting.
In your own back door.
Thank you very much, Dan.
Thank you.
Thank you.
Thank you.